joint tenants do not technically inherit. Isn't joint tenants got the rule of survivorship? Let's unpack that a little further, Julia. Why do you say joint tenants do not technically inherit?
They don't receive the share of the property, let's say just husband and wife, half share of the property. They don't receive it through the will. There's nothing triggered as an inheritance to get it into the section on inheritance. In fact, in that area is another complete separate section for joint tenants, and it clearly states that if you're a joint tenant and you receive half a property as a survivor of that joint tenancy, then you are deemed to have owned that property basically the same as the joint tenant did. You go back to their cost base. And that's fine if it's a family home, never been used to produce income or something. But if it's exposed to income producing, you basically get the person's CGT liability as well. And if it's the home that they're living in when they die, then if it went through the will and you inherited, the other section of the Act says that if it's the deceased home, you reset the cost base to market value at date of death. So basically, if there's any capital gains tax liability on a property owned by two people and one dies living in the home and it goes through the will, you can halve the tax bill when the survivor eventually sells it compared to if you kept it as a joint tenant. Now, that's a huge tax saving, but it's like a tax trap. And so many times you see that normal family arrangements are eroded by little traps in the Tax Act.
So basically a joint tenant means that you have ownership with your spousal. Usually that's the standard model. And if I was to get hit by a bus, Jane would then just basically, as a surviving interest, will take surviving ownership in that particular asset. Whereas tenants in common is effectively the surviving interest or the interest of that property goes to the estate.
Oh, it's sort of talking about my favourite trick, which is sell your principal place of residence just before you die, get your main residence exemption on that completely, move into the holiday home and die there, and then your heir inherits it at market value like another one of your gold.
There's only one trick. You just got to be able to get the timing right on a part of something that you do not generally know about. I had
a client that did it triple.
Really?
Yeah, triple.
Wow.
It's a webinar on my website that tells the story.
If you think about Part 4A on the previous question where the tax office is going, hang on a second, they're sniffing like crazy for all these little rabbit warrants. You'd think they would close that one, wouldn't you? That if just by two people, by having tenants in common versus joint tenants, everything else being the same, you could halve a tax bill, which in the case of property transactions can be significant amounts of money. You'd think that they close that one.
No, I think it should be the other way round. Why should a couple, like if you and Ben owned a property together, and Ben was living in it, right?
Yeah.
You'd own it as tenants in common. Ben dies, you get a reset to market value.
Yeah.
Why should the classic husband and wife arrangement of joint tenancy increase your likelihood of having a tax bill? I object to it the other way round.
Amen. I hear you. And if you can get that over the line, you'll have rounds of applause. But I'm thinking from the perspective of the ATO, they'd be going, hang on a second, that's a loophole we should close.
Well, what, that they reset to market value, or that they can have two properties or the three properties?
Well, they can reset the market value instead of
they've got to say Part 4A, you die just as a tax scare.
Now, everyone's thinking, well, this is easily solved, isn't it, Julia? Let's all just quickly contact our lawyers and let's transfer our ownership from joint tenants to tenants in common. Now, let's not give away the trade-off here.
That's fine.
Yeah, the pun, right? But in terms of doing that, my question to you are these. Surely I've got to pay stamp duty.
No, because you haven't, should not be. I mean, who knows what goes on in Victoria? But,
Come on. Okay, but traditionally, no stamp duty.
And changed the ratio of ownership. You still own it 50-50.
Yep. So changing from joint tenants to tenants in common, hopefully no stamp duty. Check with your local legislators. So there's always potentially a catch. And what is the catch associated with this is it goes to the estate. And that means that, okay, what does that mean, Julia?
Well, it means it could be up to challenge, because survivorship is always deemed as a way of making sure that it bypasses the will, no one can challenge it. But in New South Wales, someone did challenge the survivor and succeeded and got half the house.
Wow. Now, that's obviously with the joint tenants one. So there is a precedent set there. But we also know in terms of, so that means that if I'm in a loving marriage, it might be my second or third marriage or whatever, that would go to my will and last testament. But you could see a lot of people coming out of the...
What's the queue? Where's the queue?
And challenge the right to that ownership, or want to get some skin in that, some personal benefit out of doing that. So that's the trade-off, isn't it? The trade-off is it goes to the estate, and potentially there are people who can challenge the estate of that person and try and get some financial gain out of that structure.
Yes, but there is limited people who can challenge your will, and that is people that are living with you, dependent on you, your spouse and your children. So for the average, we're talking here to your young couples, unexpected death, that sort of stuff. The kids are probably minors. It's probably the first marriage, none of those messy businesses. Then I think it's a go. If the house has been exposed to capital gains tax, if it hasn't, there's no point.
Good.
But if
people were pulling over, they were stopping
property and living there.
Yeah, people were pulling over. They were stopping their gym sets as they were listening to this podcast or their jog, because they're starting to blow their mind in terms of, wait a minute. Remember, if it's your principal place of residence and you haven't had any other capital gain event or so forth, and it's always been that, nothing really to see here in terms of what that looks like, right?